Chances are you found this video because you searched for the Trump token. Chances are you're holding the Trump token. Chances are you're down on that holding because the price went from $70 all the way down to $18. Now this is the textbook definition of a pump and dump. If you were very early, if you're one of the crypto native people that learned about Trump early, then you made money and then you exited and then you wouldn't watch videos like this. But because you're still hoping for the best, you are checking out what's going on. Does it make sense that at some point we will see at least partially a recovery? Is it logical that at one point we will see at least a partial recovery? We're trying to answer this question in this video using on-chain analytics. So using data from the blockchain itself, from Solana, where the Trump token is traded. Now, on the Solana blockchain, Trump is still the largest trending token in terms of liquidity. Have a look at this table over here. Both the official Trump token, but also the Melania meme coin dominate the Solana chain. Fatcoin, the next largest meme coin, is only roughly 1/10 of the size of Melania. Now, the followers of this channel had been one of the early adopters, right? The very first video on Trump was published when the price was still $13. Afterwards, the price went up by more than 400% to now come back down again. Still above that first video, but far away from the original heights. That first video, by the way, got a ton of views, more than 8 times the views of an average video on this channel. That single video alone made almost 1,000 subscribers. And that's probably somewhat justified because, again, crypto is all about being early, right? It's about being informed more than the others. It's about following the market closer than others. So if you're following currently crypto channels that talked about Trump after the all-time high, then probably you should be considering following others. Now let's look at the Trump data. We have seen a massive deleveraging event. So there's not just a spot market for Trump, there's also perpetual futures contracts. And the more money is on those bets on the price, the more inflated the price tends to be. And we still see continued outflows from the perps. In other words, the very short-term speculative money continues to exit. Initially, those perps were mainly long, so people were betting on rising prices with leverage, so the financing costs were very high. Now recently, in the last few days, we see slightly short interest, so people tend to now bet more on falling prices. But again, overall interest is declining. Now market makers and centralized exchanges don't just make money with trading fees, right? They also make money with liquidation fees. And so the more volatile a price is, the more liquidations happen, and thus the more fees get generated for those people. And initially, of course, there was this massive run up and people got liquidated on both directions, both on the long side and on the short side. And now in the recent past, we mainly see long liquidations. No surprise here, but there's definitely more liquidations in February than we've seen, for example, in the last month of January. So now people start to get really wrecked again. The market is in cleansing mode, as in the excessive exuberance, the multi-X leverages, they now get kicked out. There's an interesting cyclicality of the Trump performance. There was initially all that positive performance that mainly happened in the early hours of UTC. Outside of those hours, Trump tended to underperform. Now what this means geographically is that with the launch of the Trump token, which happened in the early hours in Asia, mainly Asians made all the money. So when the US woke up and they bought the Trump token, they got wrecked. Europe still got a bit of initial performance, but then afterwards get wrecked. So in total, the Asian market is still in profit, almost 2x. It's the US market that got burnt. They got minus 74%. Now again, all of that profit had been made in the early days. If you're still holding onto Trump, even if you're just trading within APEC hours, you're not making that much money now either. Now let's look deeper into the holder statistics. Let's look deeper into what's happening on chain. We've got now 665,000 wallets that hold the official Trump token on the Solana chain. And that's actually going down over time. The all-time high was on the 19th of January at 817,000. Every day, we now see roughly 5,000 wallets exiting the token. But here's the thing. This was a transfer from the retail investor that doesn't know better to the people that are very well versed in crypto. Because when we look at different holder thresholds, so to be counted for the wallet on the left, a wallet has to hold at least 60 tokens. So that's currently $1,000 worth of the token. When we look at that, the number of those wallets got cut roughly in half, maybe a bit more than that. But when we look at the whales, the wallets with 6,000 tokens, so that's now $100,000 worth of the token, that went down more. So the whales bought faster and they sold faster. They took advantage of the rally and they took profit very early. 2/3 of the holders had already exited on the 20th of January. And by that time, less than 1/3 of the retail investors sold. We now also see that more and more of the trading volume gets taken over by small retail. So the whales really aren't that interested in the Trump token anymore. Have a look at the trading volume in US dollars on the left and normalize to 100% per day on the right. We obviously see how the trading volume is declining to minuscule levels compared to the launch days. We can also see that over time, the whales take up less and less of the trading volume, and it's the small and medium-sized retail that take over the trading volume. For a meme coin to grow, we need to see new investors coming into the token. And yes, maybe current holders might be selling and the net number of people is going down that hold the token. But when we just look at the new people that enter, irrespective of the people that exit, is maybe that at a good level? The answer is no. In the first days, we had more than 500,000 new wallets that exchanged the token, that bought into the token. Now the number of first-time traders is 1,700. So that's 0.3% of what we saw on the very first day. Really, nobody is buying the Trump token on the Solana chain anymore. And so that then begs the question, right? How can this price go up when there's only 0.3% of the initial purchasers that now enter the token on the chain? For a price to increase, there needs to be more buying pressure than selling pressure. And if that's not retail investors, it would have to be market makers. But the market makers already own a lot of the supply, and they are also aware of the tokenomics. They also know that more and more of those tokens will hit the market in the next months, right? So this is taken directly from the website, from the Trump website. This is how the supply increases over time. We are currently at 200 million, and over time, this will increase to 1 billion. The first unlock is 3 months after launch, and the launch happened on the 18th of January, so it's not even 1 month from that point. Now, in the end, it doesn't really matter what kind of altcoins we chose, right? Pretty much everything went down. So it seems like it's more important to time the macro than the micro, right? The individual asset selection isn't that important. It's more important to exit when prices are high and to buy when everything is depressed. But then the question is, how much longer could we fall? What we see over here is the Bitcoin dominance. So how much of all of crypto is in Bitcoin? And that tends to oscillate somewhere between 40% and 70%. When it moves from 70% down to 40%, that means that Bitcoin becomes less important, and that means that the altcoins are massively outperforming. However, when Bitcoin's dominance is going up, that means that Bitcoin holds up relatively well. It can perform better than the alts, and it might make sense to rather be allocated towards BTC than towards the altcoins. Now, how much higher could this go? Again, this moves between 40 and 70%, and currently we are at 62%. So another 8 percentage points, potentially a bit more than that. I also like this measure over here. This shows how much are the people short-term bearish on crypto. How much are they risk off? This graph shows the stablecoin dominance. So not the Bitcoin dominance, but the stablecoin dominance. How much of all of crypto is in stablecoins? When this is very high, then the market is spooked. Then nobody is in anything risky. And when this is very low, that's the exact opposite. The market is very, very excited and wants to buy all kinds of meme coins left and right. And there is a very strong connection between the prices, right? An inverse relation. When the stablecoin dominance was at its peak, that was when Bitcoin bottomed out at 16K. When the stablecoin dominance was at its bottom, that is when Bitcoin didn't rally that much anymore. And once we saw a similar bottom in the stablecoin dominance again, Bitcoin's price also tended to not rally that much. Now, are we going to go sideways for a bit longer to then go up again, or are we going back into the 80s, 70s, and 60s and revisit those stablecoin dominances of 18%? Nobody knows. But this does give us an idea that this is potentially just the beginning of the market cooling off. The market historically had been way more risk off than it is today. Yes, I know that's hard to believe when a lot of altcoins are down more than 50%, but there have been times when people went even more into the stable coins. And that, of course, would mean more pain ahead. Now, here's what I believe is ultra important during times like this. When it's not really clear where the market is going, we need to have a plan what to do in case things turn around. The issue I see with most beginners in crypto is that there's only a plan for bull markets, right? When there's a bull market, we follow the influencers, we try to track those influencers, we try to buy small altcoins, and we hope for those altcoins to make multiple X returns. Now, when the market turns around, when it turns bearish, then the question is, what should we do? And if there is no plan, then people simply just keep on holding those altcoins and riding them all the way down to zero. So it's very important to have a plan what to do in case the market doesn't expand further from here. To be completely objective, right? Because if there's no strategy what to do in a bear market, and the issue is that there won't be anything, right? Then you will simply just freeze up and do nothing. There are opportunities in bear markets. I actually think that it's easier to make money in bear markets than it is to make money in bull markets. For example, have a look at this. This is Balancer relative to Ethereum. This goes down pretty much all the time. And I started shorting this over here at the beginning of 2023. Now, this is a relative valuation chart, right? This is not Balancer in US dollars. This is Balancer relative to Ethereum. And so the volatility is relatively low. BAL underperformed Ethereum by more than 84%. And Ethereum didn't do that well either. And the reason why some of those altcoins go down that consistently is because of supply expansion, right? More and more tokens hit the market. Some tokens get allocated to early investors or to the team. They then get an unlock, they get a vesting unlock, and they can then sell towards the market. And this additional supply over time depresses the price. This is why we see those bad relative valuation charts, but we can take advantage of that by betting on falling prices on relative valuations. Have a look at this, right? This is Arbitrum relative to Ethereum. Also pretty much going down all the time for the exact same reason. And so if you have never shorted an altcoin before, if you never made money with an altcoin going down, or if you never made money with relative valuation short, so you just bet, say, on BAL or on Bitcoin going down in US dollars, but you never really played this relative valuation game where the volatility is much smaller, then probably you're missing out on a lot of potential alpha. Most altcoins underperform Bitcoin most of the time. So we can pretty much diversify with short positions. With longs, that is not so easy, right? When we buy an altcoin, there's maybe one or two altcoins that go through the moon and others just go along and they're not outperforming that much. So we have to pick the few winners. But with picking losers, it's not that hard because, again, most altcoins underperform Bitcoin most of the time. And so I made a lot of tutorial videos on this concept. First of all, how to think about this in the portfolio, but also how to execute on those individual trades and how to find tokens that underperform Bitcoin and Ethereum the most consistently. So there's this video over here, how to win in bear markets by shorting altcoins. There's this one, gaining from relative valuations, so not in US dollar prices, but in relative underperformance to Bitcoin and ETH. There's here, shorting optimism relative to BTC. That video was published on the 5th of May 2023. So over here, since then, the price went down by 63%. And yeah, there are also more conceptual videos where I'm making nice drawings, how to profit from falling prices, how to deposit collateral, how to borrow against this, etc. Then here's another video, my steps for opening a link/BTC short. Chainlink also underperformed Bitcoin massively since then. And so if you don't want to get wrecked like the vast majority of market participants during a potential bear market, I'm not saying that the bear market has already started, but in case you don't want to get wrecked once it does start, there will be a time, then feel free to check out those videos here, right? They're all part of Premium. Premium has more than 100 tutorial videos. It's not just about shorting altcoins, it's also about managing risk and how to be properly set up across asset classes. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, then feel free to message me within the first 7 days and I will refund you 100%. I know this price is not very low, but it might be low comparable to the potential losses you might make if you don't have a strategy for bear markets. And so if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.